Hey, welcome to the brokerage. Step right in, grab a seat. I'm your aviation insurance broker, and today we're sitting down for a one-on-one consultation. Whether you're flying heavy metal for the airlines or just hitting the pattern in a Cessna 172 on the weekends, navigating life insurance as a pilot can seriously feel like flying in hard instrument meteorological conditions without an autopilot. It's disorienting, but hey, that's exactly why you're here. In this explainer, we're going to map out your complete flight plan for securing the best possible life insurance coverage tailored specifically to your logbook.
Okay, let's dive into this, because the very first thing we need to do is bust a massive, completely outdated myth. So many pilots walk into my office genuinely believing that simply holding a pilot's license automatically disqualifies them from affordable life insurance. Or they think they'll be slapped with these astronomically huge premiums. Well, as the industry consensus highlights today, that old kind of barnstorming skepticism, it's totally gone. Modern life insurance underwriting is highly sophisticated and literally entirely data-driven. You aren't just some generic aviation risk to them anymore. Underwriters want to know exactly what, where, and how you fly.
So here is our flight plan for this explainer. We're going to decode the underwriting matrix, profile your specific risk, look at high-hazard flying, map out how to avoid some major policy traps, and then finally, secure your plan.
All right, Section 1, the underwriting matrix, decoding the aviation supplement.
Now, this supplement is the absolute cornerstone of your application. When you apply, you aren't just handing over a medical history. Underwriters are going to probe into the exact technical and operational details of your flying. They're looking closely at the type of aircraft you fly, your certifications and ratings, total years flying, your annual and total flight hours, and of course, any incident or FAA violation history. You might be wondering, why are they so nosy? Well, it's because these granular, specific details allow them to replace broad, really expensive assumptions with incredibly accurate risk assessments.
And this brilliantly illustrates exactly how those details translate into dollars and cents across 5 key vectors. Your certificate level really matters, right? Because an ATP or commercial pilot operates with rigorous regulatory oversight, earning them the highest ratings. Then there's your instrument rating, which mitigates weather risk and is usually a hard prerequisite for top-tier preferred rates. We also have total flight hours, proving your long-term proficiency. Hitting milestones like 1,000 hours actually triggers lower rates. But look at annual hours. They measure your statistical exposure. Actually flying over 300 hours a year as a private pilot often triggers surcharges. And finally, aircraft type. Flying a multi-engine turbine usually looks a lot better on paper than a piston single. So you see, every single one of these variables directly impacts the premium you're going to pay.
Moving on to Section 2, profiling your risk, from student to airline captain.
Let's figure out exactly how carriers stratify risk. And I want to start with my private pilots out there. I want to reassure you by anchoring our conversation in actual, real-world safety statistics. The odds of being in a fatal plane crash are roughly 11 million to 1. Statistically speaking, you are much, much safer cruising in your Cessna than you are driving your Camry to the airport. The underwriters know this math perfectly well, which is exactly why we have so much leverage to get you a genuinely great policy.
But we need to understand that carriers balance 2 really critical metrics: total hours versus annual hours. Your total lifetime hours act as a sort of proxy for your proficiency and your ability to handle an emergency. Obviously, you want these to be as high as possible. But annual hours? Those are a measure of frequency and statistical risk exposure. Think about it. If you have 5,000 hours but only flew 5 hours last year, insurers are going to see you as rusty. On the flip side, if you fly 500 hours a year just for fun, you're viewed as overexposed simply by the sheer amount of time you spend in the air. So we're always looking for that sweet spot for private pilots, which is usually right between 30 and 150 hours annually. That perfectly shows you're proficient without wearing a target on your back for extra fees.
Now, what's really interesting about this slide is how those pilot categories translate into what the industry calls a flat extra surcharge. Basically, this is an additional fee charged per $1,000 of your policy's face amount. Notice that for commercial pilots, it drops all the way to 0. They are the gold standard. For private pilots flying under 300 hours with an instrument rating, it's also generally $0, no extra charge. But look at the student pilot down there. They typically face a flat extra of around $3.50 per 1,000. It just physically shows how getting experience and stacking ratings literally drops your premiums down to 0 extra cost.
Speaking of ratings, if you are a Visual Flight Rules or VFR private pilot, I really need you to focus on this. The instrument flight rating, the IFR, allows you to fly using only your instruments. Underwriters value this immensely because a frankly staggering 75% of weather-related general aviation accidents are fatal. So getting your IFR isn't just about becoming a safer, more capable aviator for yourself, it is the ultimate premium saving upgrade.
It's very often the absolute direct prerequisite to unlocking a preferred plus rate class.
Now, if you're a student pilot sitting across my desk right now, here is my insider advice to you. You're currently in a sort of wait-and-see period. You haven't proven a track record just yet, which means you're definitely going to get hit with that permanent flat extra surcharge. So my strategy for you? Buy a shorter-term policy right now, just to ensure you have base coverage locked in for your family. Then, once you hit that critical 100 solo hours threshold or officially obtain your private pilot license, we go right back and reapply for your long-term level premium policy. That's how we lock in those dramatically improved rates.
Section 3. High-hazard flying, ag, experimental, and bush pilots.
I wanted to share this little snippet from an actual carrier rate guide to prove a massive point. Not all life insurance companies view aviation the same way. Not even close. One carrier might flat out deny a crop duster immediately, while another has a specialized underwriter who totally understands modern agricultural aviation safety. So if you do any kind of specialized flying, carrier selection isn't just a minor detail. It is absolutely critical to getting covered at all.
Let's break down exactly what they're looking for to mitigate these really unique risks. If you're an ag pilot, underwriters care deeply about your equipment. They want to know, are you in a modern, turbine-powered, crash-resistant airframe, like an air tractor, or are you flying an older converted airframe? For experimental and home-built aircraft pilots, insurers exercise extreme caution during Phase 1 flight testing. Having significant time and type in a proven kit like an RV series helps immensely. And for bush pilots flying the backcountry, underwriters want to see your local off-airport landing experience. A guy with 20 years in Alaska will absolutely get a better rate for bush flying than a high-hour flatland pilot trying it out for the very first time.
All right, Section 4, Avoiding Policy Traps, Exclusions, and Group Plans.
As your broker, part of my job is warning you about financial traps, and we need to start with the Aviation Exclusion Rider, or AER. This is a policy stipulation stating the insurance simply will not pay out if your death is caused by an aviation-related accident. Sometimes carriers will dangle this in front of you to keep your premium low. So the crucial point is, I explicitly 100% advise against accepting an AER. For an active pilot, the cockpit is statistically your highest risk environment. Excluding it, that is a complete failure in financial risk management. You need full, comprehensive coverage, no exceptions.
Another really common trap is relying purely on group insurance, stuff from associations like AOPA or ALPA, or even your employer. Comparing these group plans side by side with individual level term policies shows you exactly why individual plans are far superior for healthy aviators. With group plans, portability is a massive issue. If you lose your job or leave the association, poof, you either lose the coverage entirely or it becomes incredibly expensive. Plus, those group premium rates, they usually increase in 5-year age brackets, and they use simplified underwriting that completely ignores your excellent health. In contrast, an individual level term policy is fully portable, it guarantees a level premium for 10 to 30 years, and uses comprehensive underwriting that actually rewards a healthy pilot with rates that can be 30 to 50% cheaper.
But whatever you do, please don't confuse your FAA medical with life underwriting. They are completely different. The FAA medical exam is just a short-term snapshot. The examiner is just checking to ensure you won't suffer a sudden incapacitation during your flight today or later this year. Life underwriting, however, is a 10 to 30-year long-term forecast. They are deeply evaluating your blood chemistry, your BMI, and your entire family history. You can have an absolutely flawless first-class medical, but if you have a family history of early heart disease, you might not automatically get a preferred life insurance rate. Like I said, they are two totally different sciences.
And finally, Section 5, Securing Your Plan, the broker's strategy. Let's move to and see how this builds, because here is exactly how I will execute the application process to build a foolproof strategy for you. Step 1 is the informal inquiry. I literally never submit a formal application first because a denial goes straight onto your permanent medical information bureau record. Nobody wants that. Instead, I send your anonymized profile to multiple carriers to see who offers the best tentative rate. Step 2 is narrative management. I'm going to help you document your aviation history in a really carrier-friendly format, highlighting your milestones and clearly explaining the true purpose of your flights. Then, Step 3 is the formal application. We only pull the trigger and formally apply to the carrier we already know for a fact is going to give you the most aggressive favorable rate.
Well, we've covered a lot of ground today, haven't we? But before you head out, I want to leave you with this final, really vital question to think about. Have you eliminated the aviation exclusion from your family's financial plan? Seriously, think about it. You spend hours meticulously pre-flighting your aircraft, managing your risk, and doing everything to ensure a safe landing. Your death benefit needs to be just as reliable and well-maintained as the aircraft you fly. Don't leave your family's financial future up in the air. Thank you so much for walking through this explainer with me today. Let's secure your flight plan, and hey, safe flying out there.